Hey guys, and welcome to the Working Money Channel. Sentiment noticed something interesting. The XRP ledger is showing serious signs of growth from both a usage and key stakeholder perspective. So two metrics here, guys, that they're looking at. The amount of interacting XRP addresses has averaged over 295,000 per day over the past week. This normal daily average over the past 3 months was approximately 35 to 40,000. Okay, so take a look at that. Average of 295,000 interacting addresses per day on XRP Ledger in the past few weeks. So that has spiked significantly since February and March when we did last see the price of XRP spike. But not only that, there's another metric as well. Additionally, there are now over 2,700 or 2,700 whale and shark wallets holding at least 1 million XRP for the first time in the asset's 12-year plus history. So that is the blue line over here. 2,700 wallets, a record high now for XRP addresses, daily XRP active addresses holding over 1 million XRP. That means, in my opinion, because let's face it, who can afford 1 million XRP, guys? Think about this for a second, especially considering XRP is trading over $2 per coin. These are whales, these are sharks, these are people who are speculating on the XRP price going up even higher than it is today. So Vet here also saying these are great stats. The XRPL has in general never been so busy in all aspects. Though, are you sure the interacting XRP addresses are correct? 300,000 accounts sounds very out of line to me. I cross-checked with XRP Scan as well. And Sentiment did respond here. The active addresses metric counts receiving addresses as well. The metric you show in the screenshot is only displaying the sending addresses. So these are all the addresses, including sending and receiving. We've got the XRP price cratering a little bit yesterday. I mean, we did see some bullish activity for XRP yesterday. I'm sure you guys were paying attention to that. The price of XRP topped roughly $2.33, $2.34, I guess, depending on where you were looking. And currently, we're right back here to $2.21, a far cry from back in the $2.12 to $2.17 range from back over the weekend when we were just kind of chopping sideways there for a little bit after that big drop. But guys, finally, we did make it. We actually were butting up against localized resistance over here, okay, just from back last week, or it was last week, butting up against that level from June the 11th. Of course, we did get the socio-political factors bringing the, well, not just the crypto market down, but many markets down. And XRP tried to get up past resistance, of course. Since then, it did get rejected. It's okay, though. Guys, this is a journey, and we're in it for the long haul. We got the crypto market that is down by a little bit, 1.36%. CMC 100, that's also down by about 1.25%. Fear and greed still staying firm, though, at neutral. 53 in the crypto space. Bitcoin is down almost a percentage point. Ethereum's down 2.35. XRP, though, up within the last 24 hours, 0.14%. So not by a lot. But most of the, look at this. Most of the coins are in the red. Bitcoin, for example, is also going down, and this is why we're seeing most of the altcoins also crater. So Bitcoin did also see a bullish event yesterday, and it did get up close to $109,000 per coin. And now it's forming what is looking like that textbook head and shoulders pattern right in here. Look at that. I wouldn't be surprised if it even came back down to 104, 105 per coin. Again, this is the short term, guys. These are the 1 hour charts that I'm showing you. Overall, though, we are still seeing, a very, very healthy trend for Bitcoin. It is looking up. Let me throw that on the weekly. I think on the weekly, you guys can probably see it a little better. We may still see some indifferent weeks for Bitcoin. This is the weekly chart. And as you guys can see, now we're on the third week of indifference. These are generally transitory candlesticks. Generally, when we see large tails or large wicks with a small body or short body, generally what we see is the trend moving in a different direction after that. So after we did see a bearish week back in late May, now we are starting to see indecisiveness for Bitcoin. But hopefully we do finally see that transitory shift, and we do see Bitcoin continue to move to the upside. Even the blockchain backer here commenting, the funny thing about charting is that over the years, certain setups and charts always remain in the back of your brain. He says, for me, that was the XVG Bitcoin chart back in 2017. It was a clean crash retrace reaccumulation breakout, and it had a peculiar ending. Well, you guys want to see the ending on that chart? Take a look at that, okay? This is the Verge Bitcoin chart, again, from back in 2017, when, yes, of course, the market was different back then, but a very, very similar pattern. Then, guys, look at this, blow off top right in here after we did pretty much retrace down to the bottom to the 0.236. Guys, look how similar that looks to the XRP Bitcoin chart on the 4 hour today. So getting down here, right below the 0.236. Hopefully we do see a similar move here, bringing XRP up even higher. So let's keep an eye on that. Zafe here bringing this to our attention. Apparently you can now buy XRP in Australia, and you can buy it through an ATM machine here. I'm just going to play you guys this. You can now buy XRP from crypto ATMs in Australia, and I guess it's a Bitcoin ATM. This guy's just going through here. Select your crypto. You can choose XRP, and it's trading for $4.21 Australian dollars. Customer notice, please read carefully. So you guys can see just that demonstration there. Ripple adoption is going real world. Yeah, I mean, we're even seeing it in Canada, guys. First Canadian spot XRP ETF is launching June the 18th. So that is tomorrow if you guys are watching this video on the day that I'm releasing it. Good Morning Crypto here posting this. So apparently Purpose Investment spot XRP ETF is set to begin trading in Canada as the race for altcoin ETFs heats up. Asset manager Purpose Investments received approval to list its spot XRP exchange-traded fund in Canada this month. Purpose was granted a final prospectus receipt, the last necessary step before the fund can begin trading, according to an announcement on Monday. The fund, which will trade under the ticker XRPP, is expected to go live on June the 18th at the Toronto Stock Exchange, marking what appears to be the first spot XRP fund approved in North America, according to a Monday press release. Purpose Investments initially filed its preliminary prospectus for its spot XRP fund in Canada on January the 31st. The block previously reported the Purpose XRP ETF gives investors direct exposure to XRP without them needing to hold the asset itself. So, guys, this is what's getting investors, institutional investors specifically, very, very excited. I mean, if you're an institutional investor and you're taking a look at the XRP chart, especially when you take it on the weekly and you just take a look at how bullish XRP has been over its lifetime, and where we were basing pretty much for the better part of 6-7 years. Okay, now we're back up close to all-time high, and this setup, guys, looking very, very similar to what we saw back in here, okay, in mid to late 2017, before that final push to the upside. There is so much to unpack here, and guys, I'm doing that over there at patreon.com/workingmoneychannel. I'm going to try to get another update out to my Patreon subscribers today. Sorry, guys, I've been in transit, so just trying to get myself organized. But yeah, going to have one out today, hopefully, either today or tomorrow. So if you guys want to hear my up-to-date thoughts on the market, the current market, price targets, all that fun stuff, you can follow me at patreon.com/workingmoneychannel. So you got to think institutions looking at the XRP chart, realizing, okay, I can get exposure to this through the Purpose XRP ETF. Down here, it says similar spot and futures-based products have already started trading in different regions, such as the Hashdex managed XRP H11 fund, a spot XRP fund that went live in Brazil in April, and the Swiss-based 21 shares XRP ETF. So that is in South America and Europe, respectively. But several US-based firms, including Bitwise, CoinShares, and Grayscale, have all filed, and we are still waiting on their approval. XRP is the fourth largest cryptocurrency by market cap, and the price of XRP did just jump. But now, as you guys obviously did see, it has gone back down. In the grand scheme of things, nothing to worry about. I mean, XRP has been very bullish over the last 6 or 7 months. And I'm betting that is going to continue. Hugo Fillion, guys, from the Flare Network even posted this, apparently calling out Chainlink. He says, the crew are so threatened by XRP and Ripple, I think XRP Fi on Flare might actually make them cry. So he posted this, okay, run the jewels. Getting a little testy. Joel Katz, he says, saying the quiet part out loud. You can't have things that are controlled by a single party at the center. In other words, you cannot have a centralized body controlling everything. Ding, ding, ding. Now you understand why Brad Garlinghouse pivoted from Ripple replacing Swift to maybe someday stealing away some small portion of Swift. I personally do not think that is the reason Brad Garlinghouse did pivot. I think Brad Garlinghouse realized that there are politics involved in the banking sector, and at a point they just had to come to the realization that, Ripple is going to get what they get. 14%, I mean, that's still a pretty good chunk of Swift. If you guys didn't see the video I did on that, I'll link it up here in the top right-hand corner. But it's funny, Hugo Fillion calling them out because apparently they are complaining. Now, Chainlink did just put out this announcement about 5 days ago. They're excited to be working with Connexus by JP Morgan and Ondo Finance on a groundbreaking way to utilize Connexus's digital payments to allow institutional clients to purchase Ondo's tokenized treasuries. Ondo is already partnered with Ripple, but no sweat. all boats are going to rise, guys. We're going to see a lot of these companies overlap in terms of their partnerships, I think. And I think this is ultimately, Brad Garlinghouse has said, and I think it's because Ripple is very confident in their position. But Brad has always said, all boats will rise. We will partner with other companies. There's always going to be these types of partnerships that are, maybe doing something a little different. But at the end of the day, it's really about bolstering up the crypto industry, bolstering up blockchain and financial innovation. And this is where we're going to get real demand for cryptocurrencies. So, I'm not worried about this. I'm not concerned. If people are going to get their knickers in a knot over stuff like this, well, grow up. Anyway, wanted to thank Chainlink, Run the Jewels, Hugo Fillion, who else here? Good Morning Crypto, Zafe, the blockchain backer, of course, and Sentiment for posting those. The more you know. Who remembers that? Wrath of Kahneman posting this. There are some interesting conversations post-Apex occurring about the XLS-80 permission domains and how it would create a permission DEX or a PDEX. Okay, guys, so we've got some more information about this and attempt to capture the topic in 6 tweets. So Wrath of Kahneman trying to keep it concise here. XLS-80 introduces permissioned domains. Okay, this system would allow parts of the ledger, including the DEX order books, to be restricted based on user credentials like KYC. The result is a permissioned decentralized exchange or a PDEX within the XRPL DEX, where only credentialed participants can place fill orders. So did you hear that? Only credentialed participants that have KYC, okay, KYC approval. These domains enforce compliance rules directly on chain. Why this is interesting? Well, we're going to get to that in a second. Let me finish this. Liquidity fragmentation and market efficiency. Okay, the trade-off of these domains is liquidity fragmentation. Multiple domains isolate liquidity, making price discovery more difficult and adding friction to trading. You might trade XRP to the RLUSD. While the Bank of America is trading it alongside using orders you aren't credentialed to participate in. So perhaps a two-tiered system. This approximates Ethereum's liquidity siloing. However, because it's all on-chain and native to the XRP ledger, fragmentation might be mitigated. So could that be what it's all about? Making sure that everybody can participate and that fragmentation doesn't necessarily affect the end user. Arbitrage can flow through credentialed participants with XRP bridging between books for credentialed hodlers. Okay, and the potential impact on XRP. Without credentialed domains, it would be difficult for Ripple to onboard regulated institutions onto the XRPL's DEX without external workarounds. The hope is that it creates demand as institutions use it for fees and bridging liquidity. Remember, bridging will only work if the market maker holds the necessary credentials for the domain they're in. Ripple's used with credentialed domains, so Ripple can compliantly route liquidity and arbitrage between the sideload books. They would likely hold the necessary credentials at first. That would position them as the regulated market maker, helping maintain XRP price discovery and domain spanning bridging with profit and compliance goals. Okay, XRP versus Ethereum. The XLS-80 would embed compliance directly into the protocol. In contrast, Ethereum handles compliance off-chain. Permission DeFi apps like Aave, Arc require separate contracts and private pools gated by external KYC lists. By remaining native to the XRP ledger, it could reduce the friction for organizations to operate there as well. And then he continues by saying, and beyond, domains would affect the AMM, allowing for permission LPs, allowing regulated entities to create liquidity pools on-chain compliantly. Further, credential domains could interact with the XRPL extensions, should those be implemented, as Vet did illustrate below. And then he links the Vet tweet there. So will validators think it is worth it? So benefits, broader institutional adoption, of course, more compliant use case possibilities like token security, regulated stablecoins, etc. And guys, when these use cases are compliant, chances are the volume is going to be higher. Guys, chances are the volume is just going to grow because now these organizations have, can have the confidence that they are working under a framework that is regulated, and the possibilities are endless there. XRPL utility growth. There's some important connections to credit and lending to flesh out, but the costs, okay, complexity, potential liquidity fragmentation, increased reliance on centralized credentialed users, reduce user interoperability. Basically, it seems like a path to create a safe way for big institutions to use the XRP ledger without requiring L2s. So what's the trade-off there? Is this good for the everyday user? The proposal is a way to merge compliant finance with decentralized technology. And I can imagine that is a very difficult dance to balance, or whatever the saying is. Well, guys, David Schwartz also commented on this topic. Andrew said, so in other words, there would be 2 different markets or more for XRP with this new amendment to create the XRPL PDEX, okay, institutional and retail, but they could interact. He says, my conspiracy mind is spinning right now. Where is Shane Ellis? Yeah, where did Shane Ellis go? Not only that, he wrote about XRP pools in 2019, long before the AMM. I'm just saying, don't shoot the messenger. Now, this was with regards to this original topic here, this original tweet thread by Crippen Reiter. Surprisingly, nothing on Apex was about price. Absolutely nothing, except one thing that could be interpreted that way. Let's just go down here because there's a lengthy discussion. Ultimately, though, Khalid says, I see, so there's nothing on a protocol level that prevents domainees from arbitraging XRP with other domains, including the public domain. But David Schwartz wrote here, exactly. So you can prove you're not sanctioned and get into a domain, then place trade offers both in the domain and on the open DEX, ideally. So many people would do that so well that it would act like almost the same liquidity both in and out of the domain. So two sources here, guys. Wrath of Kahneman gives his explanation, of course. And again, I link all this in the description if you guys want to go over it further. It does remind me of this tweet here, this tweet thread from Hexagon. I want to thank Danny Dark so much for posting this. At first, I looked at this and I'm like, that looks oddly familiar. I remember this when this was being discussed. And then if you look closely in there, this was a screen grab from one of my very, very old videos that I did when my logo was different. And I can see that was my Twitter. That was my logo. And so I thought, heck, why not? Let's bring that video up from, how long ago was this? 6 years ago. This was from November 2018. The Hexagon theory, guys. Is this what we're seeing in real time now, 7 years later? Listen to this.
Hey guys, and welcome to the Working Money channel. So this tweet was sent to me by XRP_Canada. I do have to give him a tremendous amount of credit. He's found quite a bit of information here. This tweet in particular from Hexagon, and it looks as if it's from some kind of generic Hexagoni account. At Hexagon 753675909 is the handle, but the content in the tweet is what's really, really interesting. It theorizes about how the retail sellers of XRP are going to make money. And so it's from a couple of days ago. I'm going to link it in the description if you guys want to read it and think about it yourself. But I'm going to read through it with you guys now, and we'll see what it all means. So, retail, reseller, and institutional liquidity markets must coexist and be separated. This is the XRP theory. So institutions and retail must work together in order for this vision, Ripple's vision, to work. So ecosystem instruction, so there's 18 parts to this. Ecosystem instructions, institutional market will be exclusive to banks and institutions. Fair enough. Retail market resellers will have access to the retail market only. Doesn't sound too promising so far, but let's keep reading. Institutional markets sign participants will have on-demand liquidity access to retail market for low-volume micropayments and exotic settlement corridors. Institutional market will be used by banks and institutions for high-volume settlement. So he's saying that for certain corridors, the lower transaction volume corridors, that will be for retail market, and obviously the high-volume markets, big SWIFT-type payments, that'll be for institutional markets. Okay, let's read on. Okay, so sell-buy walls will be stable in the institutional market due to terms of use agreement and absence of speculative third-party reseller and retail takers. So in this scenario, they're talking about the sell and buy walls will be up, and XRP will be at a certain price that is agreed upon. That will take out the speculative aspect altogether, so there won't be wild swings up and down. And so insinuating that we're going to coexist in this XRP ecosystem, let's keep going. Value of XRP digital asset will be agreed, and the agreement will be signed by institutional market participants in order to achieve the best ecosystem's performance, liquidity, and settlement flows. Now we know that David Schwartz has mentioned that in order for Ripple to run smoothly, the price of XRP needs to be at a high enough point in order for that liquidity to be available when those big transactions need to be transferred. So the price will be agreed upon. And this is part of the buy and sell walls. We can't have the kind of fluctuation that we're seeing right now in the cryptocurrency space because it's just too volatile. We need to have a consistent price of XRP in order for this to happen effectively. Okay, let's keep going. Retail market investors will appreciate XRP value based on institutional market valuation. So whatever the institutional markets agree upon, we're also going to see those prices. Institutional markets valuation won't let the price fluctuate in retail reseller market. So we're all going to have the same digital asset XRP, and it's going to have an agreed upon price. And the institutions are going to have control over what that price is. From former David Schwartz tweets, we know that the price needs to be high in order for this to work properly. And so in this theory, they're theorizing that we're going to benefit from that. But the price is not going to fluctuate. It's going to stay up somewhere and kind of keep consistent. That's my understanding of this. Let's keep going. Retail market digital asset holders will switch from speculators to market makers, thus building stable sell wall supply, reflecting institutional markets XRP price value. So now we become market makers. We are no longer speculators in this market. We become market makers, and thus we sell our our XRP to the institutions that need it. So the sell walls are in place. We're kind of locked in at a certain price, and we could sell as we need. Institutions and banks don't necessarily have to pay retail investors for high volume liquidity settlements due to available high liquidity settlement rails in institutional markets. So again, for the high settlements, they might not need to, but we're talking about the exotic corridors now. Smaller rails, smaller transfers. We know Ripple is on track to dominate, and so there are going to be different facets in this. There's going to be the SWIFT type payments, which are huge, cross-border remittance payments, which are smaller transfers under $100,000, and so they want to have all their bases covered.
I just want to stop it there because I want to remind you guys, this was 2018 when we thought cross-border payments was it. So there was SWIFT, there was cross-border remittances that I was talking about all those years ago. But guys, fast forward to 2025, and I'm just mentioning this because, again, this video is 6.5 years old now. There are so many other applications now that are being built on the XRP ledger, and I wasn't even considering them at that time. Let me continue.
XRP digital asset will be added to SDR currency basket, thus stabilizing world monetary system and RippleNet's ecosystem. So now problem solving. Who is going to pay retail market XRP holders? So who's going to pay us, guys? Let's see. New coming retail investors, not institutions, only on-demand corridors. Institutional market will provide high volume liquidity rails amongst institutions for itself. How to reduce price fluctuation? Sell buy walls. Current XRP holders will become market makers, supply. They will build sell walls based on the institutional market XRP price. Retail market makers won't be willing to sell cheaper than institutional market price. So again, they're going to be the sell walls, and that is just going to be the price. And when companies need XRP in those corridors, we will be available to sell for them. We become the market makers. If demand is higher than supply in retail markets, XRP price will be appreciated, thus benefiting price and liquidity growth in both markets. And yeah, this is why they say, guys, keep hodling. Hodl for years. You know, maybe you want to relinquish some of your XRP beforehand, but I think it's short-sighted to dump everything when it hits $50, for example.
I'm going to stop there one more time because I just want to say, even though I did say this and think this back in 2018, my thoughts have changed, and this is why I created the Patreon, for example. I made the mistake of round-tripping my XRP one time. I'm not going to do that again, so again, if you guys are interested in seeing what I'm doing for this particular bull run, and I thought I would mention that because I don't want you guys to think, oh, well, he said it in 2018, therefore he must mean it today. Anyway, let me continue.
I really do. I think that you could probably live off your XRP for the rest of your life just by selling little bits at a time. Again, it depends on how much XRP you have. But, you know, if you have a sufficient chunk, I could see this happening. I could see us becoming market makers, and as the demand grows, as Ripple starts integrating and RippleNet becomes more prevalent around the globe, we could see this become a reality. So why high demand? XRP will be backed by institutions, thus demonstrating trust and stability, store of value, digital gold, utility, bridge asset, liquidity tool, real world use case, value of XRP, sudden price increase. XRP value will be added by institutional market participants. Retail market price will be reflecting value accordingly. Liquidity, institutions and banks will have access to both markets for high volume, low volume, and exotic corridor settlements. Possibility. So the theory is both ecosystems already coexist. XRP ledger payments and XRP ledger exchange. Then he just goes on to say that he's not a financial advisor, and then tagged a bunch of XRP Twitter community people in the tweet.
So I'm going to leave it there, guys. Think about this for a second. We were talking about this in the context of, well, just the remittances, just the cross-border payments, SWIFT and those financial institutions, the smaller partnerships. But now, guys, it's getting so much larger, and David Schwartz has now said there is going to be a way for two different types of parties to interact in a decentralized manner. One which, KYC is going to be important. Those are the institutional grade transactions, but retail cannot be shut out of that. Remember, guys, XRP wallets have exceeded 2,700 for the first time ever in XRP's 12-year history. So I wanted to thank myself for making that video all those years ago. It's great to kind of look back and see where we were then and compare it to where we are today. But that's just my opinion. And for more opinions on where I think the market's going to go, you can follow me at patreon.com/workingmoneychannel. Check it out, guys. There's also XRP swag you can purchase here at the Working Money Channel merch store. Link is in the description of the video, but that's just my opinion. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.